Good day, it's Wednesday, about 7:15, and we're going to take a detailed look at silver and impact. IPT ticker. So I got two charts here side by side, and I guess the first thing to do is just to pull it out, which is always good etiquette, and I think I'm here going to be giving a lesson to myself. I've kind of jumped into a trade a little bit preemptively, and now I gotta deal with the mess. So it's not going to be too bad, but hopefully this doesn't seem too confusing. But silver on the left, and then this mining stock on the right, and I got it on a monthly time frame, so we can look at the past bull market in silver, and we can see this long correction and a little dip right there. And yeah, we can then get a grander sense of where we are in terms of momentum, and we're talking trading now, not investing. We're talking about timing the tops and selling off and all that kind of stuff. So the first indicator that I do like to use, and I feel like these are a little bit more valid in longer time frames, and you know what, it really depends on the chart itself too. So right here we have CFDs on silver, and I guess you could like see the representation of the high peaks and momentum with the top of the bull run here, and this kind of long drawn out negative momentum phase of the immediate aftermath of the bull run, which was really strong, really bearish, so that's how you can use this stuff. And some charts are pretty good. I mean, it seems like they're almost, as soon as it switches color, it's just like, oh, that's a great investment opportunity. And other times it's partially correlated, sometimes not at all. So that's why I have these multiple indicators here, because each one of them provides a little bit of insight, and that's variable, but depending on which chart you're looking at, to be honest. So if you can get consistency within one asset even, and use the same indicators, that's almost the best strategy. And instead of trying to apply a strategy that works with a particular asset to a bigger, broader spectrum of different types of assets that don't necessarily trade the same way. That being said, I mean, you can see here at some of these bigger bottoms here, like that's where, I mean, you could say it was a decent time to have a good upswing, or a decent time where it signaled a change in momentum. Vice versa right here too, right here as well. I mean, that's a pretty clear representation. Right here, not so much though. So when you look at this downward parallel channel that it formed right there, you can see that that didn't reverse right here. So if you just like jumped on the gun right here, you still have to go for the majority of the ride down, and you can start seeing it's giving the different kind of clicks to say, hey, we might be completely done. And you can see one right there too. So you can see it's not completely consistent. I mean, you can get a little thing like that kind of gives you a misrepresentation. Like you might think, oh, this is still going down, and then it did go down a little bit, but just to proceed back upward. I mean, maybe you can make a bigger argument that it didn't continue on with that polar trend. Maybe that was a preliminary sign of weakness. I mean, it's tough to say, but when you have these mountains that form like double tops or triple tops, it's usually a sign of the strength there. And sometimes, let's say we go back here, you can see it's starting to round, and then it takes a little step back, and then it just like shoots off again. So you'll get to see that they're not quite as clear as you'd like them to be, and sometimes they're not clear at all, and sometimes you can't use any information from them. But sometimes you can look at it, and I mean, especially if you see the correlation between the same chart, you can kind of suspect that maybe we're at a point in time that we're going to have, let's say, a somewhat of a trend reversal, or at least there's an indication that probability is a little bit more increased. Not uncertainty by any means. And other things that you can look at with this momentum thing is, let's say, the curvature of the momentum. So when you see it slowly curving, typically that means a more gradual, inclination or declination of the price. And when you see this steep rise, yeah, typically it's kind of saying, hey, we're going to have some parabolic movement or very exponential gains or declines. And some people would even say that you can put, let's say, momentum, you can do like indicators on these too. Like I don't do very many trend lines on momentum, to be honest. I mean, I'll do it on RSI and stuff a lot more. You can see down here I'll use things like like trend lines and just like support and resistance a little bit with RSI more than momentum per se. But maybe other people will use that a little bit more. I mean, you could say that this dip was the strongest, this dip wasn't as strong, but you could see how that rationale isn't very absolute as it dipped even lower there in terms of price. So yeah, I mean, I wouldn't use that as much here, but I mean, I would look at more to see how much these tops and bottoms are correlated. If there is a certain level of correlation with them, then you can actually use this stuff as good. And if not, then I guess you just have to leave it for that chart. Other things is like when you start nearing the top, you can usually start seeing it round, and then it's kind of giving you a suggestibility that potentially it's going to be rolling over. Now, you can see how that can lead you on in the wrong way too. Like you can kind of see that it starts flattening out right here. You'd almost say that, yeah, the natural assumption would be that it would continue on like that, but that's not always the case. And I mean, we got to remember that was the height of the bull run there too. So sometimes these momentum things are gravity defying, you could say, you know, but normally you see it kind of do this and it rolls over, and sometimes it might give you a little better accumulation entries. You know, you can use this stuff for accumulation and kind of scalping off too, especially if you're working in percentages. But that was a little bit more of a rant than I thought, but like we can see here, based on that information, that, I mean, you can definitely see how this is flattening out. Now, is it going to continue upward right here? I mean, we haven't quite had a complete cessation, and even then, like, we can have a bad month and rebound. It's not abnormal in a bull run. Like you see in silver kind of shoot off in that little, well, it's a larger time frame here, but you can also see like the heights of the momentum change. So that's like in perspective to the asset growing too. So the ones in the past always look kind of non-consequence. They look irrelevant, is what I'm trying to say, because the mounds always get bigger if the asset is growing. So that's also something to notice when you're trying to do historical comparison. But so right in here, you know, you can see I'm basically saying there's a partial suspicion that this momentum is making me uncertain about silver potentially just kind of fizzing out, let's say, especially because it's on a monthly time frame. This isn't no daily chart, it's a monthly time frame, but all the same, we can see historically an example where it just pauses briefly before it starts really rising again. So let's not be too let's not try to like overestimate how much that's saying. But right here we can also look at impact here on a monthly time frame, and yeah, you can say that this isn't as correlated, but you can say that it's kind of flattening here too. So it's either going to flatten and then continue up, or it's going to have it's a pivotal point, is basically what we can say. It's kind of like what's going to happen here. So I'd much rather it be at a more certain time frame, since I did enter in such a big position on this impact. And my position is actually right what it is right now, 94 cents. So when we zoom up, you can maybe justify why I did that in the moment, especially looking at a shorter time frame. But yeah, we can look at the MACD, and that's more or less what this is too, like the 12 and 26 day moving average, and sometimes, you know, it's kind of an indication of a trend reversal. Most of the time you can see, and you can almost see the momentum underneath right here, right? It's not completely the same, so it's a little bit different representation of a similar type of idea, you know, but more or less these are momentum type of things. So you could say that I like to swing trade when I do trade, kind of ride the wave up and exit out at the top, or as it's gone up past your buy point. So yeah, you could say during these flatter times, you could say that those are decent times to buy. You know, you could have started buying, I guess, right from this point and accumulated up, and then that would have been probably the first indication that, hey, maybe this is going to be going places. And it looks like it's been on a continual uptrend since. So most of the time when you look at an asset, you'll see the bull run, and then you'll see it come down and kind of flatten out here, and then it'll start kind of squiggling up, and then I'll have another one of these bull runs. So you can see here it was probably coming from a flattening, and then it squiggles up. Looks like it has a big fake out to get everyone off, and then one more pump up. Hey, that's how these markets work, you know. I mean, you probably wouldn't be too upset if you actually did, let's say, buy here and sold there. You couldn't kick yourself too much, but obviously it was much better right there. And that's where most of the time it's better to do increments instead of all or nothing. So yeah, right here we could say overall silver is still pretty bullish with the MACD. It's still going up generally in terms of a long-term investment strategy. And same thing here. I mean, this isn't quite at the very top of a big loop, right? I mean, it's still somewhat on the uptrend. You know, it's not completely destroyed. And then when we look at the RSI, I mean, we're not in a real severely overbought zone. I think this one is pretty darn good. I mean, when you're in these peaks above that 70 RSI, I mean, it's pretty tough to be buying at these peaks. I mean, you could have got away with it, though. When you look at buying at the beginning of a bull run, I mean, you can still buy at the very peak and still make profit ongoing, but you definitely haven't made any profit buying at this ultra peak right here when it shot to this RSI. And you can see that we had a peak here, right? It was definitely it was kind of moving too fast too soon, we could say. I mean, so it was much better buying a long-term asset of silver, let's say, down at this, when it touched the 40 RSI. Just think, look how good that's correlated. You would have been buying silver at $11. I mean, so seeing this, I mean, anytime that you can see silver, you know, low here is probably good in a long decade to decade sense. I mean, the thing now is, like, if this is truly at the start of a bull run, the RSI is not going to necessarily get that low again. So you could say, like, down here it touched 40 right there, and then it shot up again, and right here before it started it was at 40. So we could be, let's say, if we wanted to be, if we're going to historically compare silver, I mean, we could say that we just did our first peak up right here. Maybe that was the first peak, but we got to consider that we're not actually above our all-time high, so that's not quite the perfect comparison. So let's kibosh that a little bit. But I think you get the point. If you can be buying silver at 40 RSI, I don't think historically, at least in the last decade or so, you're ever wrong. I mean, it's almost like a perfect black and white indicator, which is almost impossible. So right here, when it starts getting low, around 40, I mean, it's golden, man. It's golden right there. So even with this next bull run, likely we'll have huge increases, and then it'll decrease. So here again, under 40, I mean, you're buying silver at these levels here. Yeah, I mean, it was great investment ideas here. So switching over to impact, I'm kind of going on a bigger rant, but the same idea. Let's say if you're buying like this stuff at 35 RSI, like, you're definitely getting it at a oversold part, and if it's not going to completely be destroyed, you're probably going to be in good times. I mean, impact is a little bit different because they had a strong opening, had a like complete crash to 1 cent, which is pretty scary, but there's no guarantees in that Wild West mining company, and we're basically right at the right at the wrong time. And they did decent going up to, let's say, the top of that bull run right here. So that's basically the same kind of from here to here. It was from 1 cent to, well, shit, $3. So that's 300x. I mean, you're just not going to get that gain. Like, you're getting, let's say, a 10x in silver, and you're getting like a 300 in these other mining ones. So high risk, high reward. You can see what we're saying. So back on this, I mean, just zooming it in here, I mean, we can definitely see that we have a line of upward support here. We have some higher lows. I mean, guarantee that these are much more off the price that it is now, right? 11 cents, 19 cents, 24 cents. I mean, if you're looking at this, it's like, I don't care about this. Like, you'd be thinking, yeah, I'll buy a bunch at 40 cents. I mean, you'll probably never get it at 40 cents, but just casually looking at that without the other incentives, like, you can definitely see how why would you really want to like overcommit right now unless you know something a little bit more, like the current pandemic and the potential for precious metals to do really well. I mean, the narrative that commodities are starting their super cycle. The green energy needs silver to function. I mean, the industrial plus precious metal type aspect of silver. I mean, there's always pros and cons, and you can flip around and say, well, what about the coronavirus? You know, are these mining companies going to be shut down? I mean, logically, we'd say that we need them to help sustain the debt that we have to incur, but governments aren't logic, and like they're not. Yeah. If you're gonna base your decision off that, you're gonna, nothing will make sense. But what they can do is give us another stimulus package, and then that's gonna prevent people from selling their silver supplies, which will positively influence silver, let's say, in the near immediate future, which is really the only thing I care about with this trade. So we're gonna, so you can see where I'm a little bit more skeptical with the monthly time frame. When we zoom it out, like, it's not where necessarily I'd be telling you to throw everything at it, but let's just zoom in here a little bit and see if we can get a little bit better idea of the present. So we're zooming in on the week here, and now you can kind of see without that longer time frame of data, like, you can get a little bit narrow sighted a little bit, and you only really see this last high in impact. I mean, you see it at 127. You kind of see that you don't see those, well, here we got that 11 cents, we got the 19, we got the 22, and then we've had quite a nice pop up here, right? We kind of clearly broke these moving day averages, and we kind of popped out of the trend line, the downward trend line. So this was the more, well, it's not. It was since 2011, so it is significant. I mean, this downward trend line here, we have 2 touches, I think a third touch there. So we ended up breaking through, which was very positive in conjunction with this huge gain rally of silver. There's more to come. It's just a matter of the immediate future here. We don't want to necessarily be taking huge hits and then have no power in the market. So you can see right here, this dotted line, that's where if I was going to jump ahead, that's where my stop is right now. And now you can kind of see it's pretty tight in comparison when you look at it on a weekly time frame here too. So looking at silver and looking at impact, you can see the momentum. Now you can see how it changes, right? It's not really just rounding. We can see there's 14 days of downturn here. So there's definitely a plausibility when we look there, if this is really correlated. Like, there's a low right there, and silver at $11. I mean, the momentum wasn't really that low here. We've definitely surpassed it. I mean, when we look at the MACD, you can see this crossover here kind of signaling, hey, are we having a good definite trend reversal? Tough to say, because we have downward momentum, and then we have downward, and then we have a little bit of positive, and then we'll back down and a little bit of positive. Kind of getting mixed signals there. With the RSI, it's that same kind of peekaboo here. You could definitely kind of see that it's over. Once you start popping out of here, it's kind of like, is this being overbought? I mean, and then you start seeing these candles. You can start seeing the sell pressure. You can see the clear wicks right there. You can just see the downward pressure that the market's placing on it. And now it's resetted to a more reasonable level. So the RSI is at 50, 52. I mean, 53. So it's not that bad. I mean, not at all. But it's kind of in the middle, right? So it's not really like you're getting the bottom. So same thing here. Like, the RSI is pretty similar. It's about 53. I mean, you can see the same kind of pattern here. Like, it's rolling over. It's the MACD has crossed over. We've had a substantial period, but it hasn't collapsed that much, which gave me a lot of price confidence in this one. Because normally you'd see some more price going down, right? So overall it is going down, but it's got a positive uptrend as well. So when we look at these types of things, this back to the chart here, we can see that it's somewhat of a triangle, right? I mean, it's not completely, let's say, symmetric, but you can kind of see the premise. It's in a downward trending triangle right now. So could say that that's somewhat bearish. If it's not like hugely proportionate, but it is. You can also say it's not quite a clear symmetric bottom. It's kind of a upward slant. So we could say that we're having higher lows here as well. And basically we're going to come to this pivot squeeze point when it's got to make a decision. Are we going up or down? And it could break through. It could have broke through right here. It doesn't look like it did. So when we're looking just more in the immediate future, that was kind of bearish for impact. It just was, because it's somewhat of the same situation. I mean, we've had this kind of this top, a little bit of sell off happening. We've had quite a bit of time on a weekly sense losing momentum, like losing some of the steam. We're out of that real overbought zone here. We've lost 30 points, but I mean, it's not completely guaranteed though. Not at all. I mean, it's not going to guaranteed go up. It never is, right? I mean, you could say here it's a little bit more, maybe I just drew that the way I wanted to, right? But that looks like a little bit more of like an ascending triangle, which would be a little bit more bullish. If I just complete this out and say I cut it off right here, it is ascending. I mean, there's kind of a clear top there at maybe 111. Maybe we could say, I think I got that at 112. Either way, I mean, it's not quite as, it's flat as this one, right? This one's more like a clear pattern down, but these are highly correlated. So it's not like I can't just grab my arrow and do something of the similar sense and do this, right? And then it looks more like a symmetric triangle, which would have equal odds of going up and down if it's not completely ascending or descending. So yeah, I mean, there's not a lot of confirmation on that. So that's why I have these two lines here. I mean, if we can break out of that, that's very positive. And I might even just like lock in some of my profits, or just to cover my butt, since it's not too certain. So you can kind of see here, there's not a clear reversal. We're kind of in the middle. It's lukewarm. Like, there's even odds both ways. I just have a tight stop on the bottom, and there's a lot of potential for upgrowth, I think. So let's continue on to the daily, and that's where we'll call it. We'll call it quits there. I've already rambled way more. I like doing this just to process it myself, and now that I got my hands up to my elbows, I better do the work. So on here, I mean, one of the bigger reasons is because it is following this support line. I mean, this trend line is like, usually you don't have them that crystal clear, and the soon as I kind of as soon as I like smell fear, like, I'm probably just exiting out. So we had this touch, and I got my limit position in, so I should be happy. The daily momentum, I don't like how that's not as steep. It's kind of just flattened out a little bit, but all the same, for me, if we can hold this trend line up here, then I'm gonna hold it, right? I'm not gonna sell it. I'm happy to hold it. If we're just kind of going sideways here, I'm happy to get in this position less than $1 too if it pops up. I think it's worth the risk to reward. I don't take that many trades, and where I set my stop was just right at 87 here. I gave it a little room. I actually set it at 86, to be honest, and now it's about an 8-9% loss that I'd take, which is more than I like taking for sure. But there's basically, the sky's the limit in terms of potential gain. So we're looking at a much higher potential long-term swing trade. And when I look here, what's going to be my criteria? So I am drawing some trend lines, let's say on the RSI, and I have more of like the longer-term trend line, or a couple-month one. It's not that long, but right here you can see if we break out of this downward trend line here on the RSI, that'd be very bullish, and we have a little bit of a short-term, more immediate support. That's for my trade, and see if I'm just gonna donate some free money to the traders out there, because it's gonna probably go up and do well, but I don't want to see it crash down a whole bunch, and I don't want to see it come below into these levels when I could be buying it at those levels, especially looking at it more in a long-term time frame. It definitely does. It's not that crazy to think that it could drop like that. especially when now we see silver kind of got rejected here. Now we're just going to kind of roll down. It wouldn't be crazy to see it come in this 22 range and then, you know, go sideways up and down and eventually make its decision, go up or down, right? But overall, every macro reason is bullish for silver. So the thing is, like, but then you can just say, well, the markets are manipulated. Yeah, I mean, so they can just they can definitely temporarily push the price down, and it's healthy too. I mean, not that them messing with it, but to regain the momentum, so the next move will be very, very good upward. So right there, yeah, I don't want it to see past this short-term RSI, and if it does, let's say, hypothetically break it, there's the next one that I'll probably stop at right around here, and then, well, on day-to-day time frames, if you're doing more shorter-term swing trades, you can say, yeah, when this RSI is dipping low, it's pretty strongly correlated to the dips, right? So right here, it's not like we're super overbought either. You know, it's not like we're right at the top right there. We're not in an overbought range. Even with silver here, you know, it's right in the middle, so it could go either way. I mean, that's a lot of conversation to basically say it's a coin flip. But it's kind of the truth, you know what I mean? I would definitely add another 5-10% in the bullish category because of the macroeconomics, and just like the risk to reward is kind of worth it. I mean, I'm willing to lose a couple $100, I guess, getting stopped out if it just has this short-term like dump out. But you don't want to do that too much, guys. I mean, and especially I'm talking to myself. So right here, yeah, I kind of have that peekaboo on the MACD, and then it's just like it's pretty indecisive. So I'm looking at, well, this 88-day moving average. It's not concrete, but it's respecting it pretty good. It's sucking back up to it. It's holding it pretty good right now. There's no reason it can't fall behind that, but this trend line's pretty good. And then I'm not gonna take like this lower low right there. I'm gonna basically say that 87 cents is as much as I'd like to lose in the, you know, if it's gonna just like dump out of nowhere. But I'm hoping for the opposite, and I don't have to, and we jump up here, and I can just not have to worry about it at all. You know, it's very plausible that we just climb up here and just jump up. That's what should happen in every sense. But you know, you never know. It could fake out and just jump up the same day too. But when you back it out, it's not. And it's 2020, right? I mean, you just don't hope for the best and cross your fingers. You look at every possibility, and there's a legitimate risk that we could have a bigger down pull to a lower level here, especially when you look at this. So I'm riding this trend line here, and I'm not gonna be like right here, and I'm saying I'm riding that trend line. I'm not taking this ride down. I'm not taking that ride. I'm going to cut my losses and reinvest at these lower places if the worst thing happens for me in the near immediate future. But it's a bigger rant than I usually do. And here's some other stuff these are other reasons that people will invest. But anyway, we'll see how that sounds. Hopefully you guys are doing well. And yeah, to my man Derek, if you listen to all this shit, then yeah, give me your 2 cents and see if it made any sense to you. All right, guys, have a good night.